Hello, everyone. My name is Natalie, and today Zoya and I are excited to present a compelling investment opportunity, BYD, a global leader in electric vehicles. Now, you may have seen headlines recently about Warren Buffett pulling some of his investments from China, sparking conversations about geopolitical risks. But does this mean that BYD is a bad investment, or is this just a golden opportunity? Let's dive in and find out.
BYD, traded on the Hong Kong Stock Exchange under ticker symbol 1211HK, has seen significant growth in recent years, with the stock appreciating as EV adoption surges worldwide. The company is also available as an ADR in the US under ticker symbol BYDDY, with a market
Wait, let's
cap
just restart.
exceeding. Yeah, let's restart, bro.
Let's just restart. When my part, I was like, geopolitical.
Bro, these like
Oh, I
buzzwords
think
are
I
killing
fixed it.
me.
I know. I think I'm getting like red. Okay.
Okay,
Ready? Ready
yeah.
for the first page. Hello, everyone. My name is Natalie, and today Zoya and I are excited to present a compelling investment opportunity, BYD, a global leader in electric vehicles. Now, you may have seen headlines recently about Warren Buffett pulling some of his investments from China, sparking conversations about geopolitical risks. But does this mean that BYD is a bad investment, or is it just a golden opportunity? Let's dive in and find out.
BYD, traded on the Hong Kong Stock Exchange under ticker symbol 1211HK, has seen significant growth in recent years, with the stock appreciating as EV adoption surges worldwide. The company is also available as an ADR in the US under ticker symbol BYDDY. With a market cap exceeding 155 billion and a PE ratio well below its main competitor Tesla, BYD presents a strong value proposition.
BYD, or Build Your Dreams, started in 1995 as a battery manufacturer and has since grown into the world's largest EV producer by volume, even surpassing Tesla in global sales in Q4 2023. What makes BYD unique is its fully integrated business model, from batteries to semiconductors to electronic vehicles. BYD controls every aspect of its production, ensuring efficiency, cost savings, and technological superiority. Beyond just cars, BYD is deeply involved in renewable energy, aligning with the global push towards sustainability.
The first pillar to our investment thesis to invest in BYD is its global expansion strategy. While many see BYD as a Chinese company, it has aggressively expanded internationally. It has already entered European, Latin American, and Southeast Asian markets, reducing its dependency in China. With production facilities now being built outside of China, BYD is strategically positioning itself to navigate regulatory concerns while tapping into high growth international markets. Additionally, with the increase of government-based subsidies stemming from growing environmental concerns, BYD is positioned to see more and more government-based sponsorship.
BYD's blade battery technology is a game changer in the EV space. It is significantly safer, longer lasting, and more efficient than traditional lithium ion batteries, making it a leader in not only EVs, but also in the global battery production. When compared to Tesla's 4680 Ni battery, BYD's battery ranked higher. Lastly, vertical integration. Unlike competitors such as Tesla that rely on third-party suppliers, BYD manufactures its own batteries and semiconductors, giving it an unmatched cost advantage and reducing supply chain risks. This self-sufficiency allows for it to maintain accessible prices for mass market consumers.
BYD's revenue streams are diversified, spanning primarily across EV sales, which is the largest contributor driven by strong demand in China and expanding markets abroad. Next, battery production, supplying batteries not only for its own cars, but also for other automakers. And lastly, in renewable energy solutions, which include solar and energy storage solutions, positioning BYD as a leader in the sustainable infrastructure industry.
In 2023, the EV market was valued at $493.36 billion and is projected to grow at 17.27% CAGR over the next decade. BYD is currently one of the largest companies in this market, boasting a significant 22% of global EV sales in 2024. Additionally, the renewable energy storage market is significantly undervalued and is expected to grow at a remarkable 29.9% CAGR. Current BYD projects, such as the 12.5 gigawatt-hour energy storage project in Saudi Arabia, positions BYD as a leader in the market by becoming the world's largest grid-scale energy storage project.
BYD's future growth is fueled by AI development, as BYD is leveraging its partnership with DeepSeek to create an autonomous driving system called God's Eye. Increased global market penetration, expanding in Europe, Latin America, and India. And lastly, with strategic partnerships with the game Blacksmith, the Uber rideshare app, and Toyota for its batteries.
BYD holds a strong position against its competitors and boasts a wide moat due to vertical integration with over 70% control over its supply chain and full control of battery production through FinDreams Battery sub-business. BYD's technology edge, such as BYD's recent release of its 1,000 kilowatt supercharger that outperforms Tesla's 500 kilowatt charger, basically charging at half the time. And lastly, the economies of scale. With BYD's dominance in global EV sales, it allows for extremely affordable EV models such as the Seagull that sells for only around $10,000, which compares significantly to Tesla's entry model that starts at almost 40,000.
When applying Porter's five forces, we saw that the threat of new entrants was moderate from high capital requirements and technological expertise. The bargaining power of suppliers was low as BYD manufactures key components in-house, reducing its dependency. Next, bargaining power of buyers was high as competitive market means consumers have many options. And fourth, threat of new substitutes was low as EVs are the future of transportation and traditional gas-powered cars are on the decline. And lastly, the industry rivalry was very high, with intense competition from Tesla, traditional automakers, and other EV startups.
Financially, BYD is a powerhouse. Over the past 5 years, its net income has increased by nearly 600%. We also see a significant growth in R&D costs, demonstrating BYD's dedication to innovation. Additionally, we saw a steady increase in BYD's assets as well as its total equity, showing that BYD is not reliant on taking on debt to grow. Although its PE ratio is a bit high at 31.4, it is expected to grow its revenues and earnings quickly in the near future, as seen in its high sales percentages.
Based on its earnings growth, global expansion, and market positioning, analysts estimate an upside potential of 16%. Using a DCF valuation model, we see that BYD is currently trading below its intrinsic value, making it a strong buying opportunity. Now, let's take a look at BYD's intrinsic value based on our DCF analysis. Our target price at 121.47 represents a 34% upside from our current market price of 90.37. We project a future revenue growth rate of 8.66, driven by strong market trends and expanding EV markets. This growth is a reflection of BYD's position in the industry and its ability to scale. We assumed an EBIT margin of 5.7 in line with BYD's operational efficiency and historical performance. Based on available data from HKG 1211, we've set D&A at 43.28 billion, which is consistent with BYD's asset base and historical trends. We assumed CapEx at 20.63, reflecting BYD's aggressive reinvestment strategy to support long-term growth and production capability. We anticipated a 1% change in net working capital to account for BYD's efforts to scale globally and meet increasing demand. And lastly, our WACC is calculated at 6.77, considering risk-free rates, equity risk premiums, and the beta adjustments for BYD's stock volatility. Taking all these factors into account, our implied share price comes to 121.47. This suggests a substantial upside from its potential current price, reinforcing our buy recommendation. BYD remains as an undervalued opportunity with strong growth potential ahead.
BYD's leadership is a key factor in success. Led by CEO Chairman Wang Chuangfu, the company has consistently demonstrated strategic foresight and strong execution. He has transformed BYD from a humble battery manufacturer to a vertically integrated company. Other management includes Liang Yubo, which is the executive VP and developer of BYD's Blade battery. The board of directors consists of non-executives, executives, and independent members who are selected by external committees to ensure quality and ethics.
Key risks include geopolitical tensions. US-China relations remain a factor, but BYD is mitigating this by expanding global production outside of China. Competition. Tesla, legacy automakers, and new entrants are all fighting for market share, but BYD's cost advantage keeps it competitive. Supply chain constraints. Rising demand for lithium and battery materials could create shortages, but BYD's in-house battery production gives it a significant edge. BYD excels in ESG, with the environmental aspect and its focus on renewable energy and carbon neutral production. The brand also boosts a social score as they're creating affordable EVs and investing into sustainable transportation. And in governments, it has strong leaders like Wang Changfu committed to long-term sustainability.
With a current price of $90.37 and a target price of $121.47, we rate BYD a strong buy. BYD is redefining the EV industry with the technology, financial strength, and global reach to dominate the market in the coming years. For anyone who's dreaming of that golden investment, BYD is here to build your dreams. Thank you for your time, and we hope you enjoyed our pitch.